stocks rising as investors look to shake off tariff and inflation concerns and digest more earnings reports that have come out this morning and yesterday after the close. Joining me now, we've got Thomas Martin, GLOBALT Investments Senior Portfolio Manager. Great to have you here with us. About 70% of S&P 500 companies, they have reported quarterly results so far this earnings season. So I would love to get the top themes that you see emerging and perhaps carrying some of the trend later throughout this year.
Yeah, well, thanks for having me on your program. And so far, we're reporting fourth quarter, and so you get numbers for that. But everybody's eyes are on what's going to happen in the first quarter, and of course next year or this year, 2025. But interestingly, there's a little bit of a bifurcation in that the fourth quarter is coming in better than expected, and that means that the growth of the fourth quarter year over year is even better than folks expected it was. The expectation, however, for 2025 was that we were going to get earnings growth in the S&P of, around 15% or so. But guidance has been lowered for FY25 just in the aggregate. And so you've seen that growth rate slip from what was about 15% to down in the 13% area. May not sound like much, but any slippage in the growth rate is potentially risky. Now, we haven't really seen it play through in the market, but those are the themes. And of course, those companies that are beating and guiding ahead with an kind of a guide to sustainably being able to continue their growth, those are the ones that are doing well. And the others, as you mentioned earlier, are being punished.
And so with this in mind, and I'm glad you bring in some of the revisions here, what do some of the earnings guidance and the revisions that we've seen come through ultimately mean for investors' portfolios and any recalibration that they should be considering?
Well, you're seeing a little bit of a broadening out. The Mag 7 is flattening. Some of them are doing better than others. You have Microsoft and Google and Tesla and Nvidia, Apple. They've been sort of used as maybe a source of funds, while companies like Meta have been kind of powering on ahead. So, making sure that you have the right exposure to those names is important, but also as the earnings coming in, to making sure that you have exposure to the names that have sustainability and start to lighten up in those that are showing maybe some signs of some issues, whether it's an execution issue or a demand issue.
And so with that in mind, as we're thinking about some of the picks that we're starting to see emerge, because it seems like a stock picker's mentality, even as some of the trend has kind of moved lower broad markets basis in recent weeks, or at least kind of just been range bound. All that in mind, how can you identify names that can continue to outperform even if the market itself is range bound?
Yeah, well, we tend to focus on earnings, and we're looking at those the forward earnings, and that's estimates. So estimates for 2025 are now really at the forefront. Switched over from 24, and we're looking for those where the estimates are going up, and that it's being driven by something sustainable. And so what you're seeing in the market is that companies are being rewarded for maintaining those estimates, and then for having an expanding total addressable market, growth in their revenues, and being able to expand their margins. So we're looking for that, and for that to be sustainable, and looking for new markets that these companies are taking advantage of.
And then just lastly, while we have you here, some of the picks that you're looking at, and I notice a few of these tickers, but would love to dive into just what your takes are on them. You've got Vertiv, I believe. You've also got Royal Caribbean, Freshpet, I believe, as well. And AppLovin is also in there?
Yeah, so I picked those because there's a little bit of diversity in there. Caribbean is just sort of chugging along. They have a lot of good underlying fundamentals with the consumer and the value proposition they have, and the stock has behaved reasonably. It's going up. Freshpet is one of those stocks, along with let's just say with AppLovin and some of these other high-flying companies that were up strong last year. Vertiv is in that category. But Freshpet, which isn't going to report until the 20th of this month, had some question about how they were going to guide at the conference where they're going to be announcing their earnings, and that they were going to guide conservatively for 25. And the stock is off 20% from its high. Now, granted, it was a strong performer in 2024, but you're getting an opportunity here to buy a company that has a lot of ways to grow their earnings on the revenue line with their customers in terms of their margins. So I wanted to highlight that one as one that's off a bit. Vertiv reported the other day and was down a good bit. They beat on all metrics except their orders were flat. But it wasn't being driven by a long-term kind of issue. It was more of a short-term dislocation. But the stock got hit off 10% or so, 8%, and that gives an opportunity to buy another one that had been up, as much as 100% last year. Finally, AppLovin, which just reported last night, has already been up 700% last year, but it's one of those companies that is on the forefront of changing its total addressable market, which is growing rapidly and growing into new products and using artificial intelligence to be able to serve its clients better and more efficiently, and to actually potentially maybe reduce its own headcount. So no surprise that that one's up as strongly as it is today, but still has further to go in our view.
All right, yeah, a lot of movement that we've been tracking with AppLovin here today, especially off of some of the latest results from the company. Thomas, thanks so much for taking the time here with us. Appreciate it.
Great, thank you.